jobs. University of Otago, 94, I was graduating with my, couple of degrees, and I was like, what am I going to do? Because you really don't have a clue at that age. Well, most people don't. And so I joined the banking industry at Macquarie Bank, graduate program. Seemed like a good way to get some professional skills, etc., which it was. It was great. Great company. Learned a lot about that industry. Had a few years there in Auckland and Sydney. But this thing called the internet was kicking off. And I actually firstly didn't have an email address until I started work. Had never been on a computer until I wrote a CV to try to get a job. But I went on the internet, I think for the first time in 97, and was reading about it, and it just seemed like a very green field. And, although banking is interesting and an important industry, I just realized it wasn't for me, and my entrepreneurial kind of streak took over, and I, 98, left Macquarie Bank at the ripe old age of 26 and started a technology company in the dot-com boom in London, in the United Kingdom, as you could, with very little experience. And so fast forward to today, I've been living and breathing the technology industry, in particular the internet, and how the internet can be used to deliver value, make things go quicker, faster, better, cheaper, etc. 3 startups, which I co-founded, ended up being acquired by a New York, ended up being acquired by a New York-based digital advertising company called DoubleClick, which was then acquired by Google. So I spent some time at Google, which was fascinating, and that was actually 2007. So Google was only less than 10,000 people at that time, and so that first 10 years of my career was really in the digital advertising industry, which is one of the 3 main business models for the internet, alongside e-commerce and software as a service. And so after Google, I started another company in New York City, and sold that company in 2013. And then worked at Palantir, Peter Thiel company in big data and analytics, for about 4 years, helping lead the commercial business. And then about 5 years ago, 2017, after angel investing for some years alongside my kind of day-to-day roles, I went full-time investing with Fantail Ventures, my firm, helping mainly early-stage companies with both capital and some know-how, and here we are today. So that's a very short synopsis, but all along the way, I think always wanting to learn more, be curious, ask questions, and there you go.
Fantastic. And tell me, the internet obviously piqued your curiosity very early on, pre-Macquarie, or what was it about it that really triggered that curiosity? Was it the newness? Was it you could see the future and see the opportunity? Because there were a lot of people who didn't see that at the time and saw it, were naysayers, if you will, haters as we might call them today, when it was in its nascent stage. So what was it that piqued your interest so much at the time?
Yeah, I guess I've always seen the possibilities, not the impossibilities. And when I first came across the concept of the internet, it was, as hard to get my head around as the first time I heard about Bitcoin, which obviously we'll come to. But when you realized it was essentially a real-time, global, connected network, which you could do many things through very cost-effectively. For example, the magic of sending an email to the other side of the world for free within seconds. That connectiveness, that immediacy, it just seemed to have so much potential. And, when I convinced myself to leave banking and jump into that, it was the dot-com boom. And so, there was a lot of hype. And as we know, the mainstream media, well, all media really, likes to hype the up, hype the down. And so I joined it as part of that. We quickly had a rude awakening, which was called the dot-com crash. But I'd learned enough about it and the possibilities of that technology, and it was still very nascent how it all worked. I mean, you remember the days in the late 90s of awkwardness of trying to get connected and trying to do things, right? But it just seemed like there was, consumer and business interest in it, and there was real adoption. And although some of the early experiments, pets.com is a famous one, didn't work out, there was something very promising there. And so that's why I sort of stuck with it.
And your experience during the dot-com bust, that would have been from the very rapid rise to its very sudden fall, would have been quite a journey. How did you go through that? And obviously at the other end of it, you still maintained your conviction that the internet was there, notwithstanding the slow dial-up speeds. And I remember the modems of the time trying to log on, and it was there was I guess it got a knock to confidence at the time.
Yeah, absolutely. I mean, look, there's a long trajectory of learning and in hindsight a lot of clarity, right, with all of this. And one of the sayings that comes to mind now is, people always overestimate the impact of technology and innovation in the short term and underestimate it in the long term. And so my first experience in the dot-com boom bust very much reflected that, because I was shocked to find that all of a sudden there was no appetite for investment in our company, and we actually had to close the doors of the business, which was a very painful lesson, because we actually had done a great job building something which had value, customers, etc., and momentum, but we weren't profit making. We needed funding, and we unfortunately in 2001 could not find it. That was the nature of the boom bust cycle. And so a lot of hard lessons, but ultimately, even though that was painful, and some of my colleagues and so on left the industry, and I got a lot of people saying to me, what are you doing? Come back to the real world, or hey, isn't that great? The internet's over, that experiment.
It is the real world. You just can't see it yet.
Yeah, exactly. But I just knew that this was real, and there was more work to do here. And I'm pleased that I did, because I just remember all of the the research forecasts about how big it would eventually be. But today, back in 2000, it was tiny, and we were some guys in the back room, not very well respected by the rest of the business community. But the rest is history. Obviously, it's a very powerful technology which has seen the adoption of anyone, just about anyone in the world at this point, given devices and connectivity, and the story goes on.
And the adoption's accelerating. We're arguably still in the nascent phase in a weird way.
Well, depends what we're talking about, right? Because people who have an email address, if you think about S curves, it's slow in the beginning, they're kind of upside down S curves, right? It's like that. But there's an inflection point where it goes mainstream. The iPhone moment, if you like, people played around with mobile devices for many years, but it wasn't really what it needed to be until the iPhone, which I think was 07. And then all of a sudden it makes sense. It was like, oh my God. And so adoption of smartphones was, very fast after that. But every technology goes through that, whether it's horse and carriage, automobile, radio, TV, etc., all the way through to the internet. And I would argue that the internet's at a pretty high penetration at this point. Maybe some of the developing countries are still, not connected. But, so we're at the other end of the S curve for just connecting to the internet. But within the internet, there are many applications and technologies which continue to build upon one another. So just being able to communicate through the internet was a revolution at one point, maybe about 96. Then being able to get information, ultimately consume content, to buy things, then having that in a device in your pocket was an absolute revelation. And then putting all of the data that served those applications out of back rooms and server closets and into the cloud, so that anyone could plug into it for a reasonable monthly fee, and entrepreneurs could build upon the cloud. The story continues on, right? And that's where we get into sort of digital assets and the internet of money. And that's just the next thing. I mean, there will be other things, and that each one of these things that operates on the internet, as well as the plumbing that makes it all work well, they compound upon one another. So yes, we've come a long way technologically, and the world has changed a lot in the last 25, 30 years because of the internet and other technologies. But, there is a very good argument that it is accelerating because of the combination of these concepts. I mean, we didn't mention AI and machine learning, camera vision, computer vision, AR, VR. I mean, there's all of these technologies utilize the internet and compound upon one another to accelerate innovation and disrupt existing industries or improve them or create new industries.
Absolutely. And so in the wake of the dot-com crash, when I guess you stuck to digital advertising at the time, didn't you?
Yeah.
And what drew you to that subsector?
I got involved with the digital advertising because myself and a couple of other guys in the UK saw a business that was doing that well in the US, which we thought we could replicate. Call it the elegant word for it is idea arbitrage. The simple thing is that we copied the idea of something that was going well in the US, and it happened to be in digital advertising because advertising was in the early days of the internet, a sort of an easy analogy to the non-internet world. If we've got people looking at content, why don't we sell advertising alongside it? So really that was about as simple as it was. It just so turns out that it became a large industry, and people like Google and Yahoo and others really accelerated it and drove it. I mean, the innovation of paid search and search engines generally, which, wasn't invented by Google, but Google, leveraged the idea and did it better than anyone else. I mean, that really underpinned a massive industry and a massive shift away from the way things were done in advertising. But as I say, that was just, the sort of entree. I learned a lot about the internet and how to build companies and entrepreneurship and so on in that first 10 years or so. But there were close cousins to that. For example, e-commerce. Advertisers, often e-commerce companies, but how do you, facilitate an e-commerce transaction on a website? Remember the days when you just didn't trust putting your credit card into a website, and fulfillment took 5 weeks, not half a day as it will here in Manhattan. And so these you learn about one topic, and you by just the complementary technologies, you learn more about those, and then it sort of bleeds into many directions.
And then eventually DoubleClick, you mentioned earlier, DoubleClick was taken over by Google, and that was a very important transaction for Google and also for you, no doubt, too. Can you talk to why it was so important for Google?
It was a really important, and still kind of a famous transaction in the evolution of the internet, let alone Google. Google had built a better mousetrap with relate to search engines and to monetizing search engines through paid search. But despite trying hard, they couldn't crack the code on display advertising. So images, video, non-search advertising, whereas DoubleClick in New York here had really cracked the code on that and done a great job of it. So, 2007, the board of DoubleClick decided to respond to an offer from one of the 3 big internet companies to acquire DoubleClick, and within 2 weeks the price had tripled and an unconditional offer was reached at $3.2 billion. And that's been one of Google's most successful acquisitions. Google has acquired hundreds of companies. Some of them have been fantastically successful. For example, YouTube or Android. But DoubleClick certainly up there as it kind of completed the advertising picture for them, and ultimately, powered display advertising, non-search advertising for all of the Google properties, including YouTube. And so, a lot of my colleagues from the DoubleClick days, not a lot, a handful, are still there.
So you were involved in the integration after that, were you? Or
yeah, I I was running a piece of DoubleClick, and I continued to do that job for maybe a year and a half, 2 years after the acquisition, which of course included. It was handled really well, and it actually worked out very well. I mean, Google's New York headquarters was on level 8, and we were in level 10 of the building in meatpacking in New York City. Yeah, so I mean, there's a lot more to integration than that, but yeah, it was sort of a match made in heaven in a lot of ways. But it was great for me personally. I mean, financially, it was my first sort of win of my career, but also getting to work within Google, which has had such an impact on the world and really brought a lot of innovation to how you build companies and culture, and you know, see what good really looks like within one of these famous companies, and the relationships you build. I mean, like observing and sort of seeing and internalizing how to do things well, and also how to do things badly. I mean, that's helpful, but ultimately the relationships you build, the trust, you know, that is extremely valuable as you move forward with whatever you're doing.
So you're learning at Google, you've sort of transported with you through time to the ventures that you're working on now. Google are famous for their culture and how they got the processes they use for originating ideas and facilitating collaboration. And I imagine seeing that firsthand and being amongst it would be very valuable.
Yeah, absolutely. And you know, I think there's a smallish number of companies which influence in an outsized way how the technology industry works, from a culture, getting things done, communications, and then ultimately the success and the confidence of those people when they go and start other companies or become investors in other companies. You know, they have an outsized impact on the technology world, which of course is the driving engine of the global economy. You know, names like PayPal Mafia you've heard about. I mean, Peter Thiel, Elon Musk, David Sachs, you know, Amazon, fantastic place to learn how to operate a business. You know, certainly Google, Palantir, which is a Peter Thiel company. Yeah, you could list a few others, but I was privileged to have a look inside those companies and build relationships with good people there, and also, you know, later in my career, particularly at Palantir, where I was certainly one of the older guys in the organization. I think there was 2,500 people there, 80% of which were technical data scientists or software engineers, and the average age was 28. I think I was maybe 44, 45. You know, that crop of young technologists, some of them stayed working at Palantir and in corporates, but a good chunk of them, and you know, spinning out and doing startups and taking their confidence and their ideas to further level up the technology industry. And so being able to know those people, keep in touch with them, ask them for advice, and also and sometimes partner with them, investment, and in you know, and try to share some of what I know, which is really great.
Which is a perfect segue to Fantail and Fantail Ventures, and which is where I understand you spend your time exclusively now. What caused you to start it up? Was it these relationships? And once you've done that, what was the tipping point for you to jump into it full time?
Yeah, I think I'd rewind maybe back to sort of 2008, and I finally could pay off my student loans, had some investable capital, and in addition to doing something, you know, safe with that capital, I decided to allocate a reasonable chunk of it to early stage investing in companies like the ones I had, you know, started. And so I've been doing that for since 2008 through 2017, and it just, you know, I'd had some success doing that. I'd also had a good amount of failure and some lessons learned. You know, pattern recognition is everything to me in how you proceed and, you know, managing a business and the startup, but also certainly in investing, and certainly in that early stage of investing, because there's not a lot of data to go on. These are very early stage companies. There's a lot more qualitative aspects, let's say, but mainly it's people focused. So anyway, I'd had plenty of learnings, both good and bad, but enough success to have conviction that I could do it on my own full time. So in 2017, I left Palantir. I also had half an eye on coming back to New Zealand, and I wanted the flexibility of being able to be an investor. But really, I having co-founded and run startups for most of my career, I was interested to not have one thing to think about every day, but to have the variety of many things to think about, which as an investor one does. So I think to date I must have invested in 60 or 70 early stage companies, and back then it was less, but I variety of doing so is very stimulating, and it only I may be sort of a couple of inches deep and many meters wide, but I have pattern recognition across those and a method to the madness, and so that's what I've been doing full time for the last 5 years or so.
And when you made the leap to starting Fantail, what were your goals for it? Was it just that personal shift and being able to be involved in a broader reach of things, or did you have a sort of a longer term vision for Fantail that you want to grow it into something that gives investors access and so forth?
Yeah, I wanted to be a facilitator of further impactful stories, and I wanted to partner with ambitious young founders like I had been, to try to help them and to go along that journey with them. I mean, I find the topic of entrepreneurialism and starting companies and imagining the future very invigorating, and without it we would have nothing that we treasure today. Like everything we take for granted as we get from A to B to C and have our day was invented by someone, and you take that for granted. We all do it, but the people that have the imagination and take the chance to create, there's a lot of risk in that. Financial risk, career risk, credibility, many risks. They're special people, and so I wanted to be involved with those people and hopefully be a part of the story of some very impactful companies, and ultimately that has knock-on effects within the economies, within the technology industries, within the communities, and that to me is quite exciting. So that's really what I'm doing now.
VC is famously a cutthroat part of, I guess, the financial ecosystem. Personally and professionally, it's very high risk for those involved. And so I was wondering, what is it about you that you think you bring to the partnerships you've been generating? I mean, there's capital is one thing, but there's often other things that are really important. Obviously, your experiences and so forth. How would you describe the support you provide?
Well, I guess I will. The context that's probably helpful. I mean, I like to say to anyone that asks that a successful company is the result of about 10% good idea, 10% capital, and 80% execution. And so the idea and the execution is really the founder, or maybe there's multiple founders. Everything emanates from them. If they are not of high values or capability, then they will not be able to attract good people to work with them. They will just not get it done. But if they are, and this is a rare, it's rare to have these attributes, and they are very determined and tenacious and will not stop but to deliver their vision, then they will be successful. And so along the way, capital has really become the small piece. And so, it is true that as a founder, you're trying to raise money. It's always hard to raise money. But for the right teams and ideas, capital is abundant in good markets or bad. And really the good teams, particularly if they've got a track record, particularly in the US. I mean, I think the rest of the VC community internationally, including New Zealand, has evolved to this in some way, shape, or form. But the founders really are the key part. And so, VC can be really hard to raise if you don't have the relationships, don't know how to talk the talk, how to explain what you're doing in the right way. But ultimately, if what you're doing is of quality, you are going to be able to raise capital, and there will be many suitors, and so it won't be cutthroat because you will be in control as the founder of a company that everyone wants to invest in, or a lot of people want to invest in. So of course, there's a continuum there between those that are in that situation and others that aren't. But I think it's useful just to sort of set that context, and I think there is a much greater appreciation for the value and talent of good founders, teams, and startups. And so the dynamics changed a lot in recent years, certainly since I've been involved. But in terms of the value that I bring, I mean, I've, for my sins, had 3 co-founder experiences and then worked within large, successful companies like Google and Palantir. So I've got some experience of the good and the bad, and I bring that open book of network and experiences and opinions. I'm very opinionated, but I'm also very honest, and I will immediately say I don't know if I don't know, but I may know someone who does. And that's really the value I bring in an early stage environment. The later the stage the company gets with good executive team, good board and governance, the less I really think I can add much value, because they're kind of off and running, especially if they've found product market fit. It's about scaling the business. It's a different set of skills than starting the business and trying to find product market fit. So I'm more helpful in that early stage. It doesn't stop me being interested in investing in the later stages. I just don't think I've got so much value to add there. So it's always being a good person. Reputation is everything in life, let alone in investing. I mean, the deal flow comes from referrals from people that you would like to get referrals from. I personally never look at a inbound inquiry for investment from someone I don't know or know someone I know, or is somehow filtered. And I probably miss some great opportunities because of that. But I'm okay with that, because relationships are a great filter for quality and a great way to be efficient about how I spend my time.
So that's part of the method to your madness you're referring to earlier. When you're choosing investee organisations or companies, what other elements? When I look through the portfolio of businesses, and we'll talk a little bit about that shortly, but when I look through the portfolio of businesses, it's there's a very wide range of that Fantail's invested in, a very wide range of organisations or startups. But there's a theme that runs all the way through them, obviously, digital, fintech, and at different stages. How would you describe that method?
Yeah, I think my investing has progressed with my knowledge and interests. So at one point, digital advertising was really all I knew about and had the conviction to actually invest in. And then e-commerce, and then data and its close cousins, machine learning and artificial intelligence, and fintech, and then its close cousin, the digital asset ecosystem and blockchain. So as my confidence to invest and recognize great teams, because ultimately that's at the early stage the thing you're really betting on. And my knowledge has increased in different areas. I've become more confident to invest in different topics. So you're right. Over time, I have invested in many different topics. They have an underpinning of startups with founders that I believe are great and have a point to prove. And they're addressing big opportunities. But in terms of focus in a particular sector, that has never been a remit for me. In fact, some people do that very well, but I would find that quite boring.
That's interesting. You mentioned pattern recognition earlier, and I was when you said that, immediately jumped into my mind. I was trying to find the pattern across all the companies. So it's obviously very focused on the founders and
the founders,
the related.
The team are going to deliver the execution, right, which is the hardest thing. They're also going to raise the money, which is can be hard, and the size of the market, which implies the problem or the solution that they're trying to deliver. And then, after those two things at the early stage, that, of course, you're looking at the business model, unit economics, very important, margins, that is, the financial plan, what it looks like today. I mean, it's going to evolve, but is that at least something I can believe? Best, middle, and worst case scenarios. And more about the market and competition. So, there's a lot more to it. I don't want to make it just sound like it's just the people, but they are a massive part of it. Like, without the good people, you have nothing.
And within the portfolio, there were some very big names, Robinhood and Kraken, being examples. Which are the businesses or amongst them, are there particular businesses that you're more excited about than others, or that right now, or that you sort of, when you think about, you spend a lot of time thinking about their opportunity?
Sure. Well, in recent years, I've invested in some later stage businesses, which Robinhood and Kraken are two of, and that is not as partner to the founding team. It's more as just an investor, but there's something about what they're trying to achieve, which really has appealed to me. So the focus has been on earlier stage, and that's still where my main interest lies. But there have been some later stage investments. And then what was the second part to your question there?
Which are of the others? Obviously, they're big household.
Which one?
There must be amongst them ones that are, you're super excited about right now. I'm sure it waxes and wanes through time with different companies, but at this sort of juncture in where the market is, are there particular businesses or sectors amongst your portfolio that you spend a lot of time thinking about?
Yeah, it's very true. One loves their children equally. But you're right. In the early stage portfolio, it's a bit of a roller coaster, and But okay, there's an Israeli cybersecurity company which has, you heard the term software is eating the world. Well, in the business of cybersecurity, it's quite hardware and appliance dependent, and deploying the best cybersecurity solutions in the world to protect the network of a corporation actually is quite a hardware intensive and time and cost intensive setup process, where effectively they need all the network data, all the blood of the patient, in order to monitor the network and see if bad things are happening. So this particular company, Cynamics, is using artificial intelligence to take a sample of the network data or the patient's blood, a sample as opposed to all the blood, to extrapolate and identify malfeasance, bad things happening within the network, just as effectively as those much higher cost, heavier deployment companies. And so, they've been going 2.5, 3 years now. Fantastic founding team, very technical, both out of the Israeli military. While everyone goes through the Israeli military, but they're in the technical group of the Israeli military. And they're bringing value, and it's like a 10x more effective solution when you build in the cost. So I really like that one, just as an example. But there's also two New Zealand companies, which are actually in the blockchain space, which come to mind also.
That was actually going to be my next question, which is how important is New Zealand for you when you think about investing? And do you, as a Kiwi, I suspect you have a bit of a bias there. I certainly do. So, the two companies, or how do you sort of look at the New Zealand VC market?
Well, I am a proud and patriotic Kiwi, for sure. And most of my career, as you've heard, has not been in New Zealand, but I've maintained really close connections, family, etc. I'm not sure if I mentioned earlier, but I moved back there 2.5 years ago, actually, just before the pandemic hit. I moved back there from New York. I happen to be here right now, but I live in New Zealand, in Auckland, and have been involved with many New Zealand companies over the years, and tried to be helpful. One of the great things about the tech industry is this culture of pay it forward, not pay me now, but I'll pay you forward. It's fine. Like, be helpful. And I really love that about the industry. But certainly I've tried to do that, not just in New Zealand, but elsewhere. And that's obviously part of the relationship building and so on. But I've made, I think, about 10 investments in New Zealand companies over the years, and have maybe 4 or 5 right now. And serve on a governance level with, I think, all of them. And I really think the technology industry is a great cause for hope for the New Zealand economy. To talk about the New Zealand technology industry, I think it's good to just consider how every technology industry in every country or city has evolved. At one point, Silicon Valley, which still is the largest by any measure, followed by New York, London, Berlin, maybe Austin, LA, and so on. But at some point it was a backroom sort of curiosity. Some crazy entrepreneurs working on stuff no one understood, and with no evidence of success. That at some point was true in Silicon Valley. But after a couple of decades, because I think it does take that long for a technology industry in a particular location to actually have success, which people outside the industry want to see to give it credibility, right? Maybe that was the 70s when that first started to happen, early 80s in Silicon Valley, and that creates a flywheel which builds upon itself. So the flywheel is success equals credibility. Success also means financial return for those that took a chance investing in it, but also for the people that started those companies, including the employees, who then start to invest in other startups and apply their confidence and conviction and networks to those smaller businesses, those startups. And then more success starts to happen miraculously. Well, it's not miraculously, it just makes sense. And that is where every city, because not every city, but most large cities, most cities would imagine, would aspire to having a technology hub, a technology industry that's going to drive high-paying jobs, tax revenue, and other good things to the national economy or the local economy. So, many hundreds, if not thousands, of cities or towns this would resound, what I'm saying. And it's true for New Zealand as well. And, I think many organizations, people, investors, entrepreneurs, and the New Zealand government, to a certain extent, have helped create a real, vibrant, and highly promising technology industry in New Zealand. And it took a couple of decades to get success. And maybe was the first success in the New Zealand technology industry zero? I think it certainly was the first global success and exit where people actually saw a return and could feel really good about it. But there have been many others since then, and there's too many to name that have contributed to that. But Icehouse, Movac, angel associations, industry associations, that they've all contributed to this, and now there's somewhat of a flywheel happening in New Zealand's technology industry. And of course, all of that is made much more efficient by the internet. The tyranny of distance is obfuscated when building a technology company using cloud-based tools. I mean, it still helps to have relationships and real-life connectivity with people in the bigger markets, but, it really doesn't matter where you are in the world now. And COVID, of course, accelerated that whole concept.
In some ways, it can actually be an advantage if, for example, you're processing overnight, or you're using technology to facilitate that, our distance. Culturally, America and New Zealand are different. Are there particular elements of the of the culture in the US that you think would, New Zealand could adopt to further its technology industry and approach?
Well, I think that we touched earlier about the world of VC, and you used the word cutthroat, right? Which implies there's a dynamic going on between those with money and those who need the money. That dynamic will, of course, continue, but it has changed in America and the rest of the world for good, and it has to a certain extent in New Zealand as well. So I think that's not a big deal anymore. If you've got a really well thought through idea with a great team, and you can elucidate that idea and why it's going to be impactful on the world, you can raise capital, and it's not limited to the local market. You can raise it offshore as well. And the COVID situation also showed us what we could achieve through Zoom. So that's one aspect. I think where New Zealand still needs some catching up is the idea of taking risk, and with risk comes learnings, failure, sprained thumbs, bloody bruised eyes, right? It's a full contact sport.
Yeah.
Starting a company, and most don't make it. But if we didn't have people who did that, we would not have a technology industry. We would not have growth in our economy like we could do. And the sort of acceptance of people's failures when they do happen, and acknowledgement that they actually are better for it, not worse for it, is something America does so well. And I think the rest of the world is sort of still learning from that, including New Zealand. But as I say, New Zealand's technology industry and the sort of New Zealand in the context of what I'm saying here has definitely improved. But it's a very important point. These people who could go work at the corporate for 30 years, but actually they really wanted to start something, but they didn't because of this dark cloud of the possibility of failure, and so they didn't do it. I mean, what a shame. What a shame for them. What a shame for the economy. That is a very important aspect to this whole story. Look, no one wants to experience failure. It's horrible, but nothing was created without many mistakes and failures along the way. And so that's
badge of honor in America almost, isn't it?
I wouldn't say it's an honor. I mean, we all do our best not to make a mistake, So it's not an honor to make one, but it is part of the process of creating stuff. And so I think America is really great in the way that their attitude kind of exists towards that.
Fantastic. Let's move on to blockchain and Bitcoin, and which is obviously something you think a lot about, and you can see that in your portfolio companies that you're invested in. You've compared the emergence of blockchain to the development of the internet in the 90s during our conversation, and I've seen you say something similar in another place as well. Why do you think it's so significant, blockchain?
Well, there's a number of ways to answer that question, but I'll give you a couple of vectors. I think the first, I'll go back to this idea of the evolution of the internet, the technologies and applications. Up until Bitcoin and the last decade or so, there's never been a native way to exchange value on the internet. There's been a native way to do many other things that uses the internet natively. And unsurprisingly, they work very well. When you listen to Spotify or watch Netflix or send an email, it works well because it's natively using the internet and built for the internet. But there hasn't been a way to exchange value, to store value, and to account for value natively on the internet. So call it the internet of value as a new piece of the internet stack, compounding upon all the pieces that already exist. That is one way to think about blockchain and Bitcoin and all of Bitcoin's kind of all of the projects that have been inspired by Bitcoin, which there are 10,000 or 50, too many to count. Another very simple way is that it's a technology which is enabled and secured when it's decentralized by not one organization, like Bitcoin is, but many others are as well. And there's a spectrum, centralized or decentralized. They can both exist on a blockchain. Many applications actually shouldn't use a blockchain. It's actually quicker and more efficient to use a common database because it is a form of database, but the publishing of a transaction to a blockchain takes effort and it needs to be validated. So it could be validated by a central organization or it could be validated by a decentralized group of nodes or individuals. It's the general's problem, which has been solved here. Now that all sounds a little bit weird, I guess, but it's an important aspect to the technology, which is an innovation and which has created a lot of imagination among developers. So that's another one. With Bitcoin specifically, Bitcoin, my knowledge of Bitcoin, as I've learned about it, I've sort of been learning about it since 2012, has helped me understand the macroeconomic environment better because, the way money works to date, it's got us this far. It's done an amazing job, but it's not perfect. It's flawed. Fiat currency, the technology that underpins that, the policies that central bankers use, it's got us this far again, and the people involved are well-intentioned. But in my imagination, could there be a better way? Could there be a decentralized form of money, a internet-native global monetary network, which consumers, businesses find value in? And that sort of investigation in recent years has really driven my conviction and my interest in the whole space. So there's three ideas as to why I'm interested in it, and probably spend 75% of my time, my sort of proactive time, on that topic. I mean, I have a lot of existing companies and so on that aren't in that space that I spend a lot of time on, but my sort of proactive thinking forward time goes into that.
We are, I guess, going through a period where Bitcoin and other digital assets are having a hard time. And you could draw parallels between that and, say, the .com period. Do you draw that parallel, or do you think they're quite sort of at a cultural level, or is it something else?
There are very strong parallels. As I mentioned earlier, people overestimate the impact of technology in the short term and underestimate it in the long term. Amazon, which became known as Amazon.bomb after the .com crash, and I think over its history has got higher than 100% compound annual growth rate, but has had something like 7 or 8 times drawdowns of 70% or more. I mean, that's a great example of underestimating technology in the long term and the internet itself. What the .com boom bust cycle did was clear out all the visitors and speculators. And the reason the bust happened was because there was irrational exuberance and overestimation of the impact in the short term. And so that is exactly what happened in 2017, 18 with digital assets and crypto. And it is a healthy thing. All of the visitors, speculators who really aren't adding and building value for the longer term get washed out. They leave. This time is slightly different because it's not a crypto Bitcoin thing. It's a macroeconomic central banker largesse thing, which has affected every asset class globally. And crypto just happened to, alongside all asset classes in the last 2 years that have been given a sugar addiction by central banks they went to totally unsustainable and unrealistic levels, and they're all getting washed out on some level, and that is thanks to the central banks. So it's nothing really to do with the companies, or whether they be just stocks, the fixed interest market, the cryptocurrency market. It is simply a matter of central bank overshooting. Like, they overshot on the easing in the last couple of years, arguably the last 13 years since the GFC. And now they're trying to fix that at risk of killing the patient, meaning the economy, by probably overshooting on the tightening. And so, cryptocurrency and digital assets are seen as still a risk-on asset. They're also liquid. So when markets lose confidence, lose value, all led by the S&P really, digital assets happen to be a kind of exaggeration of that. So, Bitcoin's down 70-ish%. I think it's about the 8th or 9th time it's been off 70% in its history, but it's on a 200% CAGR. Not to say that that's going to happen in the future, but it's clearing out all of the visitors and speculators, and a version of that's happening in other markets, the equities market, the fixed interest market. I mean, we're coming to the end of a 42-year cycle of monetary policy easing, and probably we're on a tightening cycle for the foreseeable future. So the fixed interest market is not a great place to be. Probably the property market, we're already seeing indications of that as well. So this time it's not just about crypto, it's about the macroeconomic environment, which of course is significantly affecting the crypto market as well, because it is a risk-on asset.
The media loves to, infer a lot from these sorts of movements. The crypto winter is here, but it's, there are no one saying the Tesla winter is here when Tesla's down a similar number, Spotify, Netflix, household names again. And it's interesting how, how it gets looked at from I guess, commentators.
Well, I think, unfortunately, the internet's brought many good things to the world, but it has had the negative impact on the media industry of dumbifying what the media tells its audience. And, it's all about clickbait, headlines, price go up, price go down, success, failure, that's what drives media headlines. And it's unfortunate because it never tells the whole story, and they frankly do a disservice to their readers, to their audiences, and in particular on the topic of blockchain, because one thing about blockchain, which is somewhat unfortunate, is that it is a very deep and complicated topic. And the media doesn't do a great job of pointing out the bigger picture. It's like anything, like any new innovation, there are things you can knock it. But there's also possibilities and progress. And ultimately, the thing that really matters is adoption. One thing's for sure is that people don't do something and use something time and again if they don't find value in it. So if they use it time and again and adopt it, it is a huge indicator that there is some value there. So there's something like 150 million crypto wallets out there now, 40 million monthly active users on Bitcoin network. These are still small numbers in a population of 8 or 8.5 billion in the world, but it's about the same point at which the internet was in terms of adoption, the 150 million number in 1996. In 1996, the user interface and the mainstream understanding of the internet was very low. So we're at a similar point. But one thing I've observed, or one thing I've come to, is the conviction that this is a trend that is not going to stop. It may slow down for a bit when media interest or prices go down, because that seems to drive a lot of people's interest in it. But it is here to stay, and the adoption is happening. And there's also a generational aspect to this. People my age or older tend to not really understand it. This is just an observational anecdote. I try to get people interested in it, and it's hard. But you try to get someone who's 30 or younger interested in it. I mean, they already know about it. You try to tell a 30-year-old about boomer rocks, otherwise known as gold, and they'll look at you with a blank stare. If you try to ask a 30-year-old about a wealth management broker, they'll also look at you and they'll be like, "Haven't you heard of Sharesies or Robinhood?" So that there is internet native technologies come easily to younger people. That's just the way it is, unfortunately. And so these topics are the topic of blockchain and Bitcoin and everything that's comes alongside that is not only native to the internet, but it's native to the generation that is about to take over the world. Demographics are irreversible, and these younger people, they understand it, they believe in it, they prefer to talk about it, own it, etc. So that generational aspect cannot be underestimated. But again, coming back to central banks and central bankers, again, I'm sure they're well-intentioned people, highly educated, hardworking, but it is true that they are all pretty much singing from the same hymn sheet. And whatever new version of that is, recently it's been modern monetary theory. And to say that they have got it right is just wrong, because they have not got it right. They've got it very wrong. Alongside pandemics and terrorism and environment, the bifurcation of income, the rich getting richer and the poor getting poorer, is one of the issues of our time. The middle class used to live easily and happily. They don't anymore. Below the middle class, even worse. Why is that? It's because of central bank policy. The debasement of fiat currency is a pernicious tax on those people that don't have assets, that only have cash, because their purchasing power is being debased. Their $25 an hour last year is now worth $24 now this year, or whatever the rate is, and so on. And over a decade or two, all of a sudden, they can't make ends meet. They need to go and get a second job, and so on. And this is hard for the mainstream audience to the average person to really understand in those terms. They just see it in their daily living. Life becomes harder, and that is the fault of central bank policy. And I'm pretty sure that central bank policy will not fix this situation in a way that doesn't do great damage to the economy. And so my imagination tells me that there may be another form of money, form of value, that preserves wealth and uses the internet in a way that is better than what we have today. And it's a possibility. It's a non-zero chance of coming true. So for that reason, I think it's very interesting, and maybe it won't be, if it does become successful, it'll probably have its flaws too, but I find that concept to be very alluring and promising and optimistic.
And it doesn't have to be Bitcoin.
It doesn't have to be Bitcoin, yeah. Bitcoin is 12 years, hasn't missed a block for, despite many challenges and I'm sure many hacking attempts. But so it's the favorite at this point, but it may not be. But keeping an open mind about the possibilities of this seems like an obvious thing that we should do. And by the way, this topic of store of value for people in New Zealand or America or some other developed country is, it's a nice thing to talk about. And maybe there's an investment opportunity there, is how most people think. But if you live in a country that is even worsely managed than our countries from a fiscal policy and monetary policy perspective, e.g. Argentina, Venezuela, name your high inflation, poorly fiscally managed country. But Bitcoin isn't sort of a curiosity. It's the only thing. It's hope. So that, to me, is pretty interesting as well.
What's New Zealand's role in this? What can we bring to the development of the industry which is different from other countries, if anything?
Nothing really unique comes to mind, to be honest. Obviously renewable energy as a source of power for some of these protocols is a good one. But that obligation exists to everyone everywhere. So I don't think that's unique to New Zealand. I think I see it more from just an opportunity for New Zealand. I mean, I've worked in the tech industry over in these countries for most of my career, and New Zealand has an incredible brand image, not with everyone, but in particular people in the tech industry. And we could leverage that by attracting talent to our country, New Zealand, by offering a much easier sort of visa living situation. In addition, specifically for digital assets, making it more regulatory friendly environment, and really try to be the kind of the hub of the Pacific, like a recognized global hub for technology, companies, talent, progress, success, but just because digital assets and cryptocurrency is a new frontier, and regulatory clarity is a big issue in all developed countries. Like, there is an opportunity there for New Zealand. So I said this to anyone that will listen when I have had the chance to talk to people in government or wherever. But of course, taking big, bold bets like that is hard, and it's particularly hard in a government context because of the election cycle and just the way government seems to operate.
Jonty, a lot of really interesting ideas. You've had an incredible career so far, and thank you for sharing your journey and your insights with us. I'm sure all of our listeners will have found it fascinating and in many respects visionary. So thank you for your time, and to everyone, we hope you enjoyed the session, and at the same time again next week. Thanks.
Thanks, Stefan.